Assalamu alaikum everyone. Welcome to Consultancy Avenue. Today we are dissecting the latest income tax amendments introduced in the Finance Bill 2024. These changes have significant implications for taxpayers, business owners, and finance professionals in Pakistan. Let's delve into the details. Let's begin with the income tax amendments. Firstly, the maximum tax slab for non-salaried individuals and association of persons, or AOPs, has been increased to 45%. Additionally, a flat 15% tax on gains from the sale of securities has been introduced for filers. In contrast, non-filers will face a progressive tax ranging from 15% to 45%, incentivizing compliance. For members of AOPs with turnovers exceeding 300 million rupees, tax exemption on their share is contingent upon the filing of audited financial statements with their income tax return. Non-filers will now face double tax rates. This measure aims to broaden the tax base by encouraging individuals and businesses to get listed as active taxpayers. There is another thing added: late filer, who files their return after due date. Specific provisions have also been introduced regarding royalty payments to associates. If you're paying royalty and claiming advertisement expenses, 25% of the advertising cost will now be allocated to the associate. Moreover, foreign travel restrictions have been proposed for non-filers. This is a strategic move to ensure compliance and bring more individuals into the tax net. One of the most significant amendments is the mandatory disclosure of foreign assets in the wealth statement. This enhances transparency and ensures comprehensive asset reporting. The Commissioner now has the authority to perform best judgment assessments for discontinued businesses, streamlining the assessment process and ensuring fair taxation. Appeals to the Commissioner appeals are now limited to cases where the tax assessment or refund value does not exceed 20 million rupees. This aims to reduce the backlog and expedite smaller claims. For advanced tax calculations, if turnover data is not provided, it will be considered as 1/4 of 120% of the turnover from the latest tax year, instead of the current 110%. Taxpayers must submit specified documents with their advanced tax estimates. Failure to do so may result in the rejection of the estimate. Additionally, the board can now set minimum values for goods for advanced tax collection. Tax exemptions on payments to non-residents have been withdrawn, aligning with global tax practices to ensure equitable taxation. The final tax regime for exporters has been replaced with the normal tax regime, requiring exporters to adapt their tax planning strategies accordingly. The rate of default surcharge has been adjusted to KIBOR plus 3%, down from the existing 12%. This provides crucial to defaulting taxpayers. Progressive tax rates have been introduced for the advanced tax on the sale and purchase of immovable property. Additionally, the threshold for vehicle registration tax has changed from engine capacity to vehicle value. Supertax is now applicable to banking companies from the tax year 2023 onwards. Moreover, the 25% tax credit previously available to full-time teachers and researchers has been withdrawn. Lastly, the tax rate on dividends from mutual funds earning more than 50% of their income from profit on debt has been increased from 15% to 25%. These amendments reflect the government's focus on broadening the tax base and enhancing compliance. It's crucial for taxpayers to stay informed and adjust their financial strategies accordingly. That's all for today's update on the Finance Bill 2024. If you have any questions or need further clarification, please visit Consultancy Avenue website, LinkedIn, Facebook, or contact us directly via WhatsApp on 0341 1128984. Don't forget to like, share, and subscribe for more expert insights. Until next time, Allah Hafiz.